Hello Rich Insiders, welcome back to our channel. Japan, the land of the rising sun and the country home to world-famous brands such as Sony, Toyota, Nintendo, Panasonic, and many more renowned businesses has now entered recession. In this video we will deep dive into Japan's recent recession and its implications for the global economy. If you're new here, consider subscribing to our channel to not miss our latest updates. So let's begin by defining what a recession is. The most common answer is when the country has seen 2 consecutive quarters of declining GDP. Then experts say that the country has officially entered recession. It's a period of temporary economic decline during which trade and industrial activity are reduced. On top of that, Japan is also facing rising levels of unemployment, falling retail sales, and contracting measures of income and manufacturing for an extended period of time. Now, why is this significant? Well, when a country like Japan enters a recession, it experiences a contraction in its economy, leading to lower output and stunted growth. This has a ripple effect, impacting everything from individual livelihoods to Japan's standing in the world economy. Japan was once hailed as an economic miracle, emerging from the devastation of World War II to claim the position of the world's second largest economy, following the US. This momentum persisted throughout the 1970s and 1980s. However, over the past 3 decades, the Japanese economy has experienced predominantly moderate growth, often stagnating since the burst of its financial bubble in 1990. Last year, Japan's nominal GDP totaled $4.2 trillion. In fact, Japan's economy was the second largest until 2010, when it was overtaken by China. Recently, Japan lost its spot as the world's 3rd largest economy to Germany, indicating the severity of its economic downturn. To understand this better, we can look back at Japan's economic rise and fall. The country has faced several downturns in the past, each one leaving a unique imprint on its economy. Stay tuned until the end as we explore the key factors contributing to Japan's current and future economic situation. One of the substantial hurdles facing the country's economy is the demographic decline. Japan is grappling with an aging population and a falling birth rate, which has led to a shrinking workforce and stagnant growth. This demographic issue has posed significant challenges to the country's economic vitality and its ability to maintain productivity levels. According to the recent data released by the Japanese government, Japan is experiencing a rapid decline in its native population, alongside a significant increase in the number of foreign nationals residing within the country, marking a record high. A weaker Japanese yen was also a key factor in the drop of Japan's economy to 4th place, as the nominal GDP measures are made in the USD. In fact, against the US dollar, the yen depreciated by around 30%. Since the beginning of 2022, the yen has experienced an average decrease of approximately 20% against major currencies. In tandem with these ongoing issues, the COVID-19 pandemic has further strained Japan's economy. The outbreak disrupted global supply chains, hitting Japan's export-dependent economy hard. Furthermore, the pandemic dampened consumer spending, a key driver of economic growth, as people stayed home to curb the spread of the virus. On top of these, Japan is also wrestling with structural issues that have been seeping into its economy for years. As per a report from Statista, in 2021, Japan's national debt reached approximately $9.51 trillion, making its debt-to-GDP ratio the highest of any developed nation in the world. High debt levels have left the government with less room to maneuver, and deflationary pressures continue to loom. Deflation or falling prices might sound like a good thing for consumers, but it's a sign of a struggling economy. It discourages spending and investment, as people and businesses hold off purchases in the hope that prices will drop further. These factors have necessitated government interventions, which we will discuss next. In response to the recession, the Japanese government has implemented a range of policy measures. One of the most prominent of these is the introduction of substantial stimulus packages. These aim to inject capital into the economy and encourage spending. Alongside this, the government has also pursued a policy of monetary easing, which involves reducing interest rates to encourage borrowing and investment. However, the effectiveness of these policies is a topic of much debate. While they have provided much-needed short-term relief, their ability to address the underlying structural issues in Japan's economy is less clear. According to a study by Japan International Cooperation Agency, the country will need 6.74 million foreign workers in 2040 to meet its growth targets. Shortage of labor, high levels of debt, and demographic challenges, for instance, cannot be solved through stimulus alone. In addition to these broader economic strategies, the government has also introduced support measures specifically targeted at businesses and workers affected by the recession. These include subsidies and loans to help keep businesses afloat and protect jobs. The effectiveness of these measures will play a significant role in Japan's economic future, which we will explore in the next segment. Now, let's turn our attention to the future. What does it hold for Japan's economy? The United States continues to hold its position as the global leader in terms of economic size, boasting a GDP of $27.94 trillion. At the second place is China's GDP, standing at $17.5 trillion. India, currently at the fifth position with a GDP of approximately $3.7 trillion, is experiencing rapid growth, estimated at around 7% annually. Particularly, this could be a challenge for Japan if India seizes the fourth position in terms of nominal GDP. That being said, the road to recovery for Japan might seem steep, but it's not impossible. Japan's economy has always shown a remarkable capacity for resilience. Think of the post-war era or the recovery after the devastating earthquake and tsunami in 2011. So, even though the current recession poses significant challenges, it's not the end of the story. Japan's recovery will likely depend on major structural reforms. These reforms could target areas like labor markets, corporate governance, and social security, to name a few. By addressing these long-standing issues, Japan can improve its growth potential and ensure a more sustainable economic future. Innovation and technology will also play a critical role in this recovery process. Historically, Japan has been a world leader in technology, from electronics to automobiles. In the future, it could leverage this strength to drive economic growth. Think about the potential of fields like artificial intelligence, robotics, and clean energy. These sectors could fuel Japan's economy in the years to come, creating jobs and business opportunities. Domestic demand is expected to rebound in the current fiscal year with the help of the ongoing trend of wage hikes and planned income tax cuts by the Japanese government. So, while the present economic situation is undoubtedly challenging, the future of Japan's economy is not all doom and gloom. With the right reforms and a focus on innovation, Japan could turn this crisis into an opportunity. As we can see, the future of Japan's economy hinges on a complex interplay of factors. What are your thoughts on Japan's economic trajectory, from its remarkable recovery after the Second World War to its more recent challenges? Do you believe Japan can regain its former economic vigor and go back to being a global leader? Or do you see its current economic situation as a more enduring trend? Share your thoughts, insights, and comments below. If you've enjoyed the video so far, share it with a friend or family. Your support means the world to us. Until next time, take care.